Morning. We'll discuss assignment question number which one? 3. I hope I made a change. Purchased on 1/7/2023. Purchased on 1/7/2023. Balance sheet is given at the end of the year, December. We purchased the shares after 6 months. So first opening balance plus 6 months will become which profit? Capital profit. Then at the beginning of the year, we are given balances. What are the balances at the beginning of the year? P&L account is given, general reserve is given. There is a mutual due given. Bills payable of S includes 15,000. Out of that, how much has been discounted? 8,000. So mutual bills are 7,000. Mutual creditors and debtors are what? 20,000. That we will adjust in balance sheet. It is similar to the last problem adjustment. On 1/10/2023, 16,000 stock of S Limited was destroyed by fire, but an insurance claim of how much? 6,000 was admitted by insurance company. This loss happened in which period? Pre-acquisition or post-acquisition? Post-acquisition. So we have to work out the profits. Let us see. Step 1. What is the proportion of shares held? What is the total number of shares in subsidiary company? 2 lakh divided by 100. 2 lakh divided by 100. There are how many? 2,000 shares. In which how many shares are held by holding company? 1,500 shares are held by holding company and 1,600. We have acquired how much? 1,600. Minority hold 400. Evlo percentage? 80% and 20%. 80% and 20%. That is the proportion of shares held. Before we work out pre-acquisition, post-acquisition profit. Okay, step 2. What is step 2? Capital profit. Whatever is earned before 1/7/2023. First, let us work out profit for the year and let us come back to it. What is general reserve at the end of the year? What was the general reserve at the end of the year as per balance sheet? 50,000. As per the adjustment, it is 20,000. So 50,000 minus 20,000. How much? 30,000 in general reserve. In profit and loss account, what is the year-end balance? 90,000 minus opening balance 40,000. 50,000 is earned for the year. Add abnormal loss. This happened in which month? October month. Abnormal loss happened in October month. So that will be specifically adjusted. What is abnormal loss by fire? Net abnormal loss. 16 minus 6. What is abnormal loss? 10,000. So if you add up, you will get net profit from 1st January to 31st December. How much? 90,000. This is the net profit for the year. Last problem we have done, opening balance was a loss. Current year we had a net profit. But in this question, opening balance is also profit. And current year also we made what? Profit. So what is capital profit? Whatever is earned before 1/7/2023. Let us take general reserve balance on 1/1/2023. What is the opening balance of general reserve? 20,000. Profit and loss account balance on 1/1/2023. What is opening balance? 40,000. This abnormal loss happened in which period? October. It will be adjusted in what? Post acquisition. So add net profit up to 1/7/2023. 90,000 is the profit earned for the year. Into the 6 months profit will become what? Pre-acquisition profit. How much? 45,000. Check for any revaluation of assets. Any revaluation of assets? Any preliminary expenses to be adjusted? No. This will give us capital profit. In this capital profit, holding and minority will share in this ratio. 80%, 20% ratio. Let's split this. So whatever is earned up to July, it becomes capital profit, pre-acquisition profit. Step 3, what is it? Revenue profit earned after 1st July 2023. That is nothing but the last 6 months profit. Less abnormal loss or loss by fire. What is the loss by fire? 10,000. So net becomes which profit? Split this between holding and minority in the ratio. Any doubt in it? Next, which one? Step 4, minority interest. What and all will come in minority interest? Face value of shares held by them. How many shares they are holding? 400 into 100, 40,000. Their share of which profit? Capital profit. Their share of revenue profit will become what? Minority interest. Last problem we had opening balance loss, current year net profit. But in this problem, both opening balance as well as what? Current years are profits. Then work out the next step. What is the next step? Cost of control. What is the amount paid for shares in S? Asset side la parang. 2 lakh 80,000. We paid 2 lakh 80,000. Share of, that is face value of shares held by us. We hold 1,600 shares into 100 rupees. And our share of which profit? Pre-acquisition profit. So 84 plus 1 lakh 16. So what is goodwill? Okay. Step 6, reserves and surplus. What is the reserves and surplus? Okay. H Limited's general reserve in balance sheet. What is H Limited general reserve in the balance sheet? 2 lakhs. Profit and loss account in the balance sheet. How much? Add share of revenue profit. Any stock reserve in the question? Any stock transferred unrealized profit is there? No. So this will give us reserves and surplus for consolidated balance sheet. Then prepare the consolidated balance sheet. Please prepare the consolidated balance sheet. For classroom purpose, you can do it without order, no issues. So opening balances, first 6 months becomes capital profit. Then next 6 months becomes revenue profit. Loss by fire is adjusted in revenue profit period because it happened in which month? October 23. Other steps are as usual. There is no stock reserve in this question. No stock reserve in this question. No bonus issue. No revaluation. Share capital of holding company will come. What is the share capital of holding company? 10 lakhs. Reserves and surplus. Step 6. Then what is the next one? What is step 5? Minority interest? 68,000. All these will come under which one? Shareholders' funds. Any long-term borrowing in the question? Debentures. How much long-term borrowings? 1 lakh. Trade payables, add creditors and bills payable. This you should do it as a working note in your main examination. 50 plus 20 plus 40. 1 lakh 10,000 less mutual bill. What is the bill mutually drawn? 15,000. In that, how much got discounted? 8,000. A balance 7,000. Less mutual due. Debtors and creditors. Mutual amount due. It will be there in other assets. Other assets will include what? Cash, bank balances, prepaid expenses, and so on. So we are mentioned as clearly as other assets, sundry other assets, which may include fixed assets also. So minus 20,000. What is the goodwill in consolidation? 36,000. We can put it as sundry assets. This includes bills receivable. What is the bills receivable given? 50,000. Others add both. 11 lakh 20 plus 4 lakh. It may be fixed asset or current asset. We do not know. 15 lakh 20,000. We can show this bills receivable separately also. No problem. Less this thing. The exam don't write like this. Please follow a proper format. Otherwise, no mark will be given. You write like this. Over. Done. So to recollect, step 1, step 2, step 3, step 4, step 5, we have done. That recollection we have done. What are the additional adjustments we learned? Number 1, preliminary expenses. What to do with preliminary expenses? Adjust with capital profit. What to do with the mutual dues? We had seen it will be adjusted with both creditors as well as from what? Debtors. It will be adjusted from creditors as well as from debtors, except the discounted bill. Discounted bill will not be adjusted. Non-discounted portions will be adjusted like this. Then, what is the next one we have learned? Stock reserve. Okay, it can be downstream, holding to subsidiary, or subsidiary to what? Holding company upstream. Profit should be eliminated from stock. But if it is upstream, what do we do? Minorities portion we eliminate from minority interest. Holding company portion we eliminate from cost of control. Sorry, reserves and surplus. Then what is the next one we have done? Revaluation of assets. Right? Revaluation can be upward or what? Downward. Adjust with capital profit. If there is an increase in the value of asset, additional depreciation, we adjust against what? Revenue profit. Then if there is a reduction in the value of asset, we add back the depreciation. Till that we have learned in the last class. Next, we'll go to that next important adjustment. What is it? Dividend from subsidiary company. Go back to the theory gap. This is special adjustment number 6 or 7. 6 was adjustment of depreciation, right? Start. Go back to the gap, theory gap. Special adjustment number 7, dividend from subsidiary company. Okay, when dividend is declared by the subsidiary company, how it will be recorded in subsidiary company? How it will be recorded in subsidiary company? They are declaring out of which account? Profit and loss account balance. Profit and loss account will be debited to dividend payable account. To which account? Dividend payable account or proposed dividend account they will create. Then they will pay the money. What is entry for payment? What is entry for payment? dividend payable account debtor to cash or bank. This is the entry they pass in which company? Subsidiary company. Wait, in holding company, will they receive all the dividend? Will they receive all the dividend? No. If subsidiary company is declaring dividend and paying the dividend, who will receive the dividend? Holding company will receive the dividend. Minority shareholders also will get their proportion. So in holding company, for the dividend received, what is the entry you will pass? We are getting an income. We are getting an income. What is the entry you will pass? Cash or bank account debtor. Cash or bank account debtor account to which account? Dividend received account. Dividend received account. Simple. Debit what comes in, credit the incomes. Credit the incomes, and the dividend received will be transferred to which account? Profit and loss account. It will be transferred to which account? P&L account. Otherwise, these are the two things that you have to note. These are the two things you have to note. When subsidiary company is paying the dividend, it is adjusted from which account? It is adjusted in which account? P&L account. And holding company, on receiving the dividend, the accountant will take it to which account? The accountant will take it to which account? P&L account. This is a normal journal entry that people used to pass. Any doubt in it? If you are clear in this only, we can proceed to the 7th special adjustment. Any doubt in the books of subsidiary company, what is the treatment? In the books of holding company, what is the treatment? Shall we go ahead? Now listen. The dividend can be, number one, declared and paid out of capital profit, revenue profit. Revenue profit means which profit? Post acquisition profit. Dividend is declared by the subsidiary company and paid out of which profit? Post acquisition profit. What adjustment you will do? Subsidiary company declared it and paid it out of which profit? Post acquisition profit. We acquired the shares. After that, the profit is earned. From that, they paid the dividend. What is the entry they would have passed? P&L account debtor to dividend payable account. Dividend payable account debtor to cash or bank. They would have already done it. We would have received the dividend and credited to which account? P&L account. So do you require any adjustment? No adjustment required. Because the dividend received is already credited to P&L account. We are doing accounting in the books of holding company only, right? The dividend would have been already credited to which account? P&L account. So no adjustment is required. No adjustment is required. Declared and paid out of which profit? Revenue profit. Okay. If it is declared and paid out of pre-acquisition profit, that is which profit? Capital profit. What we should do? Yeah, subsidiary company would have proposed the dividend and paid the dividend, and we would have collected the dividend and taken to which account? Dividend is received, that is taken to which account? P&L account. But pre-acquisition profit, do you adjust in P&L account? No. Look at the even last problem. Pre-acquisition profit, what do we do? Pre-acquisition profit, holding company share, what do we do? Do you add it to reserves and surplus, that is P&L account, or adjust in cost of control? Holding company share of capital profit, what do we do, sir? We adjust in which one? Cost of control, because it is part of pre-acquisition net worth. That profit is earned before the shares are acquired. Okay, can you take that dividend to P&L account? Can you take the dividend to P&L account? I repeat, who declared the dividend? Okay, who got the dividend? Holding company. What the holding company's accountant would have done? Would have taken to which account? P&L account. If it is out of revenue profit, it is okay, correct. If it is out of capital profit, is it correct to transfer to P&L account? No, it should be adjusted with which one? Cost of control. It should be adjusted with which one? Cost of control. Okay, since the accountant would have recorded or included the dividend in which account? In which account? P&L account, a rectification required. Rectification is required. What rectification? It was wrongly included in which account? P&L account. Simple. Eliminate from profit and loss account in step number 6. What is step number 6? Reserves and surplus. Eliminate from P&L account. Which dividend? Total dividend or holding company's dividend? Holding company's share of dividend should be eliminated from which one? P&L account and which one? Step 6. And what should be done properly? It should be adjusted in cost of control. So we are not accounting, actually we are rectifying error. The accountant has taken to P&L account, a rectification is required. What rectification? You have wrongly included the pre-acquisition dividend to P&L account, eliminated in P&L account and adjust in which one? Cost of control. This is second part. Okay, this is what I have given over here. While learning the steps, first steps or the step, look at step number 5, I would have given notes. Amount paid for shares in which company? Subsidiary company. Then face value of shares held by holding company in subsidiary company. Then holding company share of pre-acquisition profit. Then holding company share of bonus issue. Then I would have given one more adjustment. Holding company share of pre-acquisition dividend from which company? Subsidiary company. If the accountant has wrongly recorded in P&L account, ensure that you are rectifying the error. Okay. So we are not accounting, actually we are actually rectifying the error. Okay. Next, third one. Proposed dividend or dividend payable given in balance sheet. Within bracket, not recorded as income in subsidiary company. Sorry, in holding company. This is a different case. They just proposed dividend or declared the dividend. They have given in the balance sheet of which company? Subsidiary company. They have not paid the dividend. They passed only this entry. P&L account data to which account? Dividend payable account or proposed dividend account. They have not passed this entry. Since this entry is not passed, holding company has not received it and recorded it. What to do now? What is the difference between first two cases and the third case? First two cases, dividend has been declared and paid. We have received the dividend and taken to which account? P&L account. If it is out of revenue profit, no adjustment required. Revenue profit we added to P&L account. Dividend is also added in which account? P&L account, no adjustment required. If it is out of capital profit, if it is out of which profit? Capital profit, okay. The dividend was wrongly taken to P&L account, we rectify the error. Third case, paranga, dividend is just proposed by which company? Subsidiary company, no payment has been made, nothing is received by holding company, nothing has been accounted. What to do? Simple. Third case, no cash outflow taken place. Simple. If it is out of capital profit, simple. Add it to which profit? Capital profit. In step 2. B. If it is out of revenue profit, simple. Add it to revenue profit. In which one? Step 3. Simple. Clear? If the dividend is just declared, not paid, out of capital profit means include in capital profit. If it is out of revenue profit means include in what? Revenue profit. Okay. That's it. Take up this. And you may have a doubt. Sir, if dividend is partly out of capital profit, partly out of revenue profit, what to do? Simple. Revenue profit portion you will ignore here. Capital profit portion you will adjust it here. That's it. If it is partly out of revenue profit, partly out of capital profit, what to do? Revenue profit portion already credited to P&L account, no adjustment required. Okay, capital profit portion, what do you have to do? Rectify the error. What is the error you have to rectify? Accountant has wrongly included in P&L account, eliminate it and adjust in which one? Cost of control. Let us assume dividend is declared for the year. We purchase the shares middle of the year. What will happen now? 6 months capital, 6 months revenue. Revenue profit period, no adjustment required. Taking the dividend to P&L account out of which profit? Revenue profit, no adjustment required. For the 6 months pre-acquisition profit only, you have to make the adjustment. Simple. Proposed dividend also. The capital profit portion adjust in capital profit, revenue profit portion adjust in what? Revenue profit. This is one of the most important adjustment. Without this, there is no exam question paper. We can find all the other questions which we are going to solve from now onwards will be having which adjustment? This adjustment. Now you can even guess the examination question. Will they ask the first one? Will they ask the first one in C exact? No. Why? No adjustment required. Will they ask the third one? No. Why? If it is capital profit, you will add it to capital profit. If it is revenue profit, you will add it to which profit? Revenue profit. They always ask this. Why? Here is where a student should understand properly how the dividend is declared and paid, how the dividend is accounted in which company? Holding company. Since the holding company's accountant has taken to P&L account, we rectify the error. And we adjust in which one? Cost of control, like that. Take it up. So whatever you have solved are past exam questions only, without dividend adjustments. In the last 20 years, only these 6 or 7 questions were asked without dividend adjustments. Next 10 or 15 questions you can find, they were asked with which adjustments, especially this adjustment. This is for your reference. This is nothing to do with holding or subsidiary company accounts. This is just to make you understand in the books of the company which is declaring the dividend, what entry they will pass. In the books of the company which is receiving the dividend, what entry we will pass. And please remember, we make adjustments in the books of which company? Holding company. We are not bothered what minority shareholders have done with the dividend. They would have taken to P&L account, they would have adjusted in cost of control. It is their problem. We are accounting only in the books of which company? Holding company. That is why I have clearly given holding company share of such dividend. Let me see your memory. If proposed dividend is given in the adjustment, that is proposed dividend for the current year is given in the adjustment, what to do? Simple, notes to accounts. Notes to accounts. We had seen in the final accounts chapter itself, as per Companies Act, proposed dividend is an adjusting event or non-adjusting event? Non-adjusting event. If they have given an adjustment that is just proposed for the current year, that will be included in which one? Notes to accounts. With this seventh adjustment, majority of the areas in consolidation is over. With respect to balance sheet consolidation, we have to learn separately which one. Income statement consolidation, that is very, very simple. Balance sheet consolidation, maximum how many questions possible or how many adjustments possible? These 7 adjustments are possible. Over அது காப்பி பண்ணிட்டீங்களா? Over. We'll proceed. Those who completed, please come to question number. What are the questions we have done? Have we done 1, 2, 3, 4, 5? 1, 2, 3, 4, 5 we have done. 6 also we have done. Mutual indebtedness, abnormal transaction, last class we have done. Come to the comprehensive problem, question number 7. This question. Following is the balance sheet of H&S as on 31st March 2023 is given to us. Share capital rupees 10 each. How much? 7 lakhs na. 70,000 shares are there. Okay, fixed assets, current assets are given. General reserve P and L account, okay. H Limited acquired how many shares? 30,000 shares on 1/4/2022. Don't start with step 1. Wait. On the date, general reserve is how much? 5 lakhs. P and L account is how much? 2 lakhs is given. On 1/10/2022, who made bonus issue? S Limited issued 2 shares for every what? 5 shares held as bonus. No entry has been made in the books of S Limited or H Limited. In H Limited, it is not recorded. In H Limited, it is not recorded. Bonus issue not recorded. Subsidiary company would have recorded while giving the bonus shares. In this problem, who has not recorded bonus issue? Holding company not recorded the bonus issue. Then, look at this. When on 30th June 2022, subsidiary company declared a dividend out of pre-acquisition profit at the rate of what? 20%. H Limited, என்ன பண்ணிருக்காங்க? They have credited the dividend to which account? P&L account. Pre-acquisition dividend, they have taken to which account? P&L account. That's what we have seen now. Accountant has taken the dividend to which account? P&L account. So holding company share of dividend eliminated in step 6 P&L account and adjust in which one? Cost of control. That's what we have learned now. Then S Limited owed H Limited 1,20,000 for purchase of stock. What will you do with this? It's mutual due. Mutual due. It will be eliminated from what? Debtors as well as creditors. That 1,20,000. Then the entire stock is held by which company? Subsidiary company. H made a profit of 20% on cost. It's a twin adjustment. One is mutual due. Second is the stock purchased is held by the other company. So you have to eliminate which one? Stock reserve. Who sold the stock to whom? Who sold the stock to whom? H sold it to subsidiary company downstream. Then there is a transfer of machinery for 1 lakh. Book value of the machinery transferred is what? 75,000. So there is a profit on sale of machinery that we have to adjust. Same like stock reserve. Profit on sale of machinery, we'll adjust for the machinery. Profit on sale of stock, we adjust in stock. Profit on sale of machinery, we'll adjust in what? Machinery. Please remember, it is not revaluation. Is it revaluation? No. Holding company sold a machinery to subsidiary company. Prepare consolidated balance sheet like that they ask. Last problem, last class, we had with abnormal loss. We were struck with which adjustment? Step 1 or step 2? Capital profit and which one? Revenue profit. I told you, hope you remember, we'll get stuck in what? Step number 1 itself. This is a kind of that problem. Try to work out step 1. Then step 1. Try. What is the proportion? Try to work out. What is the proportion of shares held? Okay, you work out the first 3 steps. Step 1, step 2, capital profit, step 2, step 3, which profit? Revenue profit, let us see. It is not 3:4. It will not become holding in subsidiary company then. 3/7, 4/7. Minority will hold more shares. And the ratio you putting 3:4 pota. Holding company has what? Less than 50%. Look at the words used. Listen. Balance sheet. There is a share capital of how much? 7 lakhs, 10 each. How many shares are there? 70,000. If you plainly take 70,000, 30,000 holding company, remaining minority, no. That is not correct. In October month, remember when the balance sheet is given, 31st March. In October month, subsidiary company issued 2 shares for every what? 5 shares held as bonus issue. Which means this 7 lakhs includes what? Bonus issue also. Please remember the entry is not made in the books of holding company. Which means this 30,000 shares do not include which one? Bonus shares. This 30,000 shares do not include bonus shares. So no entry has been made in the books of holding company only. Subsidiary company would have already recorded bonus issue. Listen, pay attention. If opening balance were 5 shares, if opening balance were how many shares? 5 shares. How many bonus shares were made? 2. Total will be how much? Proportion. If you are holding 5 shares, how many shares bonus? 2 share bonus. So totally will be how many shares will be there? It's like 5x, 2x, total of 7x. This is given to us. If 7 is 70,000, including bonus issue, how much would have been the bonus shares? How much would have been the original shares? Clear? If you're holding 5 shares, how many shares are given as bonus? 2 shares. Totally 7 shares will be there. Totally if 70,000 shares are there, how much would have been the bonus? 20,000. How much would have been the opening balance? 50,000. Now out of this 50,000, we purchased how many shares? 30,000 shares. So 60%, 40% can be written as what? 3:2. Clear? We acquired shares on 1/4/2022. At that time, how many shares would have been there? At the time, how many shares would have been there? 50,000 shares would have been there. In that, we acquired 30,000 shares. Minority shareholders hold what? The remaining 20,000. And this 30,000 do not include which one? Bonus issue. Clear up. Holding company. No entry has been made in the books of holding company for the receipt of which one? Bonus shares. Pick up this. Then try step 2. See, this can be worked out by an alternative method also. Many of you would have tried this. Total how much is there? 70,000. In that, how much holding company holds? And they would have got bonus issue 2 by 5. 2 by 5. Bonus issue 2 shares for every 5 shares held bonus issue. Now, how much would have been the bonus issue for holding company? 12,000. So totally how much it will be? 42,000 is for holding company. Balance is for minority. Balance how much? 28,000 is for minority. Even this will come in the 60-40 percentage. This also will come in what? 3:2 or 60-40 percentage will come. But this is a good method of working. This is also accepted as answer. This is also accepted. If you have done this also, it is okay. But it is better to go by this method because it will be useful for our other steps. Now, tell me, bonus issue was made out of what? Capital profit or revenue profit? One is I told you in the last class itself, if nothing is given, bonus issue is made out of opening balance of reserves. Second is, you look at the general reserve balance. In the adjustment, they have given opening balance 5 lakhs. Opening balance, how much they have given? 5 lakhs. Look at the balance sheet amount, general reserve of subsidiary company, 3 lakhs. Normal general reserve will go up or it will remain the same. It is reduced. Opening balance was 5 lakhs. Closing balance is 3 lakhs. Now, general reserve reduced. When general reserve will reduce? This problem, bonus issue. So, bonus issue was made out of which one? General reserve. Take up this. For every 5 shares, 2 shares bonus, totally 7 shares. In the balance sheet, they have given 70,000 shares, that is including bonus issue. If including bonus issue, 7x is 70,000, 2x is 20,000, 5x is 50,000. In that 50,000, we acquired 30,000 shares. Minority shareholders have what? 20,000 shares. 60%, 40%. Try to work out the step 2. What is step 2? Pre-acquisition profit. There also you have to think and work out. General reserve at the beginning of the year given in the question how much? 5 lakhs. From that bonus issue was made. 20,000 shares in return, 2 lakhs will go. Balance how much? 3 lakhs. Any doubt in it? General reserve 5 lakhs is given in the adjustment. In that bonus issue, 20,000 in return, 2 lakhs will go up. Balance in general reserve would have become how much? 3 lakhs. This is nothing but the closing balance. What about P&L account? What is P&L account given at the beginning of the year? 2 lakhs. Wait. Don't take that as capital profit. Point number 3. Read point number 3. What is point number 3? Out of this 2 lakhs, the balance on 1/4/2022, on 30th June, who declared dividend? Subsidiary company declared dividend. So they would have declared dividend out of which balance? Current year profit or opening balance? Opening balance. Out of this 2 lakhs, they would have paid how much dividend? 20% dividend. So what is the dividend amount? Will Will you work out 2 lakh into 20%? No. We have done final accounts and all, right? Dividend will be calculated as a percentage of paid up capital. So 20% on 20% on 7 lakhs. No, 7 lakhs is including bonus issue. See, dividend is paid for current year or paid for pre-acquisition period. Dividend is paid for current year or for pre-acquisition period. Pre-acquisition period. So pre-acquisition period means before 1/4/2022. Otherwise, on 1/4/2022, did we have 70,000 shares or 50,000 shares? So dividend will be paid only for how many shares? It is not that bonus shares are not eligible for dividend. They are eligible for dividend, but this dividend they are not eligible. Why? Dividend is paid for which period? Pre-acquisition period. During the pre-acquisition period in the subsidiary company, how many shares are there? So P&L account. In June, we declared the dividend. Out of this, 50,000 into 10 of 5 lakh shares into 20%. So opening balance of P&L account was 2 lakhs. Pre-acquisition dividend 1 lakh. Net balance 1 lakh. Subsidiary company, while paying dividend, what is the entry they would have passed? P&L account data to dividend payable account, right? So they would have adjusted from opening balance. The reason is in June you will know only that opening balance. Current year profit will not be known to us, number one. Number two, okay, dividend is declared for which period? Current year period or pre-acquisition period? Pre-acquisition period means out of opening balance. So general reserve 3 lakhs, P&L account how much? 1 lakh, totally 4 lakhs. Split this in which ratio? 60%, 40%. I repeat, general reserve was there, but we made a bonus issue. It became 3 lakhs. P&L account was there, but dividend out of which profit is paid? Pre-acquisition profit is paid 5 lakh into 20%. So 1 lakh, 4 lakhs. 2 lakh 40,000, 1 lakh 60,000. Then post-acquisition profit. Entire current year profit will become what? Post-acquisition profit. General reserve paranga. Opening balance was 3 lakhs. Sorry, closing balance given in the balance sheet is 3 lakhs. Opening balance was 5 lakhs, but from that we made a bonus issue of 2 lakhs. Now the balance became how much? 3 lakhs. So 0 in general reserve. Balance sheet la paranga evlo general reserve kuduthirukanga. 3 lakhs is given. Opening balance 5 lakhs, don't take it. We made a bonus issue. So the balance became how much? 3 lakhs. 0. P&L account in the balance sheet, how much is given? Subsidiary company. 3 lakhs minus opening balance. Will you take 2 lakhs or 1 lakh? 1 lakh only because we paid dividend out of that opening balance. So 2 lakhs. 2 lakhs will become net profit for the year. That will become which one? Post-acquisition profit. Split it. 60%, 40%. See, this I can explain through an alternative method. What was the reserves and surplus at the beginning of the year? At the beginning of the year, 5 lakh plus 2 lakh. 5 lakh plus 2 lakh, how much? 7 lakhs. At the end of the year, balance sheet. At the end of the year, what is given in the balance sheet? 3 lakhs plus 3 lakhs. This 3 lakhs plus 3 lakhs. What is the closing balance? 6 lakhs. We made a bonus issue and we declared what? Dividend. So if you tally this, you will get net profit for the year 2 lakhs. Clear? Opening balance was 7 lakhs, sir. Closing balance of reserves. General reserve plus P&L account. We made a bonus issue and we declared what? Dividend means how much of profit made for the year? 2 lakhs of net profit is made for the year. Yes. This is an alternative method of working out revenue profit. take up this fast, then we'll proceed. Minority interest, as usual, we can work out. Face value of shares held by them, original shares, 20,000 into 10, 2 lakhs. Minority share of capital profit, minority share of revenue profit, and minority share of which one? Bonus issue. In the 2 lakhs, minority will share 40%. $20,000 shares into 10, 2 lakhs. Their share of pre-acquisition and which one? Post-acquisition profits. And their share of which one? Bonus issue will give us minority interest. Unless a student has tried this question in the class or at home, examination, suddenly too much thinking will not come. We know what is holding company, subsidiary company, capital profit, revenue profit. That number game we'll understand better when we practice many questions. Any doubt in why are we adjusting with bonus issue with general reserve? It's a clear evidence that general reserve reduced. Then P&L account opening balance was 2 lakhs. Pre-acquisition dividend, which means for the pre-acquisition period, 50,000 shares into 10, 5 lakh into 20% they would have paid, adjusted in opening balance. Then general reserve after bonus issue 3 lakhs, P&L account after dividend 1 lakh, adjusted to find out what net profit for the year, or you can do by ledger method also. Whatever belongs to minority, their share of capital profit, their share of revenue profit, their share of which one? Bonus issue. What about dividend? What about this dividend? Is it just declared or declared and paid? Declared and paid. They would have got money. They would have got what? Money. This minority interest represents undistributed net worth. Undistributed net worth. Net worth which is there with subsidiary company. So dividend already they would have got. We are not bothered where they have taken P&L account, capital. We are not bothered about it. They got the dividend, so ignore it. Face value of shares held, share of capital profit, share of revenue profit, and which one? Share of bonus issue. Now I request you to pay attention. Every one of you, I request you to pay attention. What is the next step we have to work out? Cost of control. Cost of control. Listen. Amount paid for shares in S. What is the amount paid for shares in S? 5 lakhs. 5 lakhs. 5 lakhs. Right? Then, what and all we have to adjust? Face value of shares held by holding company. How many shares originally we purchased? First we purchased how many shares? 30,000 shares into 10. How much? 3 lakhs. Then, holding company share of capital profit. What is the holding company share of capital profit? This 2,40,000. Then, don't forget, holding company share of bonus issue. What is the total bonus issue? 2 lakh. In that, we hold how much? We share how much? 60%. Minority share is added with minority interest. 40% is added here. 60% will be adjusted in what? Cost of control. Most important, what the holding company's accountant has done with the dividend. H Limited credited the receipt of dividend in which account? P&L account. This is what we learned. We require a rectification of error. What rectification of error? The accountant has wrongly taken to which account? P&L account. We have to adjust with cost of control. Holding company share of pre-acquisition dividend. What is the total dividend? What is the total dividend, sir? 1 lakh into how much percentage? 60% holding company would have received and wrongly taken to P&L account, but it should be adjusted with which one? Cost of control. So 5 lakh, 7 lakh 20. We get what? Capital reserve. 5 lakh we invested. Net worth is 7 lakh 20. So is it profit or loss? Profit. We paid more or less? Less. 5 lakhs the investment, but net worth is 7 lakh 20 means it becomes which one? Capital reserve. So far we had seen only goodwill based problem. This is a capital reserve. Wait, step 6 also let me to work out reserves and surplus. Take the reserves and surplus of holding company. What are the reserves and surplus of holding company? General reserve plus P&L account. 2 lakhs plus 3 lakhs. Reserves and surplus of holding company how much? 5 lakhs. Add holding company share of revenue profit. What is the holding company share of revenue profit? 1,20,000. 1,20,000. Then, most important, the accountant has wrongly taken the dividend to which account? The accountant has wrongly taken the dividend to P&L account. Eliminate it. Less holding company share of which dividend? Pre-acquisition dividend. ரொம்ப simple. Accountant, instead of adjusting in cost of control, they have taken to P&L account. We just rectify the error. That's it. Eliminate in P&L account. Adjust in which one? Cost of control. Then, most important, stock reserve. Look at the stock sold. What is the stock sold? 1,20,000 stock sold. Entire stock is sold in the Solirka. So, which means entire 1,20,000 of stock is sold. What is the profit margin? 20% on cost. On cost, if it is 20%, on sales, it will become 20 by 120. 1/5 on cost, 1/6 on sales. So, less stock reserve downstream. Why it is downstream? Who sold the stock to whom? Holding company sold it to subsidiary. 1,20,000 into 20 by 120, 20,000. And one more. Holding company transferred a machinery at a profit. What is the profit? 1 lakh is the selling price. What is the book value? 75,000. Eliminate that profit in machinery. Profit in machinery. These two things will be eliminated in the asset side also. From stock, you will reduce how much? 20,000. From machine, how much you will reduce? 25,000. Don't forget, this is a goodwill or capital reserve. Capital reserve, it should be included in reserves and surplus. If it is goodwill, it will come in which side? Asset side. If it is capital reserve, this will be included in reserves and surplus. So for balance sheet, what is the reserves and surplus? 7,35,000. Take up this. It's a fantastic problem which can be tested for 15 marks in the exam. Compared to the previous question, what is the extra thing in this question? Dividend wrongly taken to P&L account, eliminated and adjust in which one? Cost of control. All others we have learnt already. Face value of share sold, share of pre-acquisition profit, bonus issue, already we know. Stock reserve, it is downstream. Holding company selling to subsidiary company. And profit and mission also, holding company sold this to subsidiary company. Eliminate the profit from P&L account as well as from the assets. In this question, it is not goodwill, it is capital reserve. It will be adjusted in what? Reserves and surplus. Take up this, please. Okay, minority shareholders got the dividend already, so no adjustment required. Holding company alone, we do a rectification of error. Eliminate what is wrongly included and adjust what should be done. What should be done? Adjust in cost of control. Try to prepare the balance sheet. Of course, we'll do it without a format. What will come in the balance sheet? Share capital of holding company, then this reserves and surplus, including capital reserve, minority interest will come. Share capital of holding company, reserves and surplus, and which one? Minority interest will come. Then, where in a liability, what are the other liabilities? Current liabilities, eliminate mutual due. Current liability, eliminate that mutual amount due. How much is due for stock? 1,20,000. Then which one? Assets. Assets are given fixed assets and current assets. Fixed assets add both minus this profit on sale of machine. Fixed assets add both. There is a profit on sale of machine by holding company to subsidiary company, eliminate it. See, unrealized profit in stock, we eliminate from stock. In the machinery or any other asset, eliminate from the other assets. Then current assets, two adjustments you have to make. Current assets include what? Stock as well as debtors. Current assets include stock as well as debtors. What are the adjustments we have to make? This mutual due, how much you have to eliminate? 1,20,000. And stock reserve, how much you have to eliminate? 20,000. So current assets of holding and subsidiary company, eliminate stock reserve and mutual amount due. Because current assets include both stock as well as what? Debtors. Those who completed this, please come to page number 122, assignment question number 1. Assignment question number 1. Total of the balance sheet 18 lakhs, 15 lakhs. No. It is given in the same model, same style. Only numbers are different. All the others are same. Which question number? Assignment question number 1. It will be in the same model, bonus issue, dividend, just for practice. Just for practice. It will be ditto like the 7th question or this question, whatever we have done. Try it. You are going to try it. I'll give you around 20 minutes of time. 20 minutes of time to read, to solve, to complete. Learning will take time, but practicing should not take much time. 20 minutes you will be able to complete. Which question? Assignment question number 1.
Sir, can you present the question?
This question. 18 lakhs, 15 lakhs, this question. Try to solve it. You can take 20 minutes of time to complete. If you look at officially, the holding company account chapter is over. What we are going to do from now onwards, today or in the next class, practice questions for a better confidence. And that assignment question number 1, all the adjustments are similar. Only the numbers are different in the balance sheet. Majority of the adjustments are, I would say all the adjustments are similar. Try pannu. That is, after this consolidated, we are ready to learn this, we learn this. It will take just half an hour time. Of course, separate learning we will do further. Check your answers. Proportions எவ்வளவு வரும்? 5:3. 5:3. Total 8 shares. If 8 shares are like 8,000, opening balance எவ்வளவு இருக்கும்? 3,000, 2,000. Okay. I took it as 10 each, no problem. I took it as 10 each, no issues. 100 each also, it will be making the same. 3,000 is to 2,000. Capital profit, whatever is earned before 1/4/2022, General reserve minus bonus issue, P&L account minus dividend, revenue profit. Same like the last question. Net profit for the year is 2 lakhs. Minority interest also. That would be called. Any doubt in it? One lakh 80 and correct. Then how much? Correct. Try to work out the other steps and prepare the balance sheet. In this question, there is no mutual due. There is no mutual due. There is no We are holding how many shares? 3,000 shares. Huh?
Sir,
Face value of shares held 3,000 into 100, 3 lakhs. Pre-acquisition profit 1,80,000. Bonus issue 3 lakhs into 60%. Dividend will be for the same amount. Reserves and surplus of holding company 2 lakhs plus 4 lakhs. 2 lakhs plus 4 lakhs, how much? 6 lakhs. Post acquisition profit share 1,20,000. Dividend is same. Stock reserve is not there. Unrealized profit on sale of machine, how much? 80,000 minus 60,000. Done up to this? Then prepare the balance sheet. Share capital of holding company, how much? 10 lakhs. Reserves and surplus 8 lakh 60. Minority interest 5 lakh 20 same. Trade payable, there is no mutual due. In this question, there is no mutual due. How much? 2 lakhs plus 2 lakhs? 4 lakhs. Unrealized profit in mission 20,000. Add both minus 20,000. 5 lakh plus 4 lakhs minus 20,000. No stock reserve, no mutual due in this question. Take holding and subsidiary companies current assets. 19 lakhs. Done. Copy done. Go to assignment question number 2. We'll try it in the class. Subsidiary company is having what? Preference share capital also, as well as what? Equity shares. But we are holding only what? We are holding only equity shares. Question number 2. When shares are acquired? 6 months later. Okay. From the beginning of the year, 6 months later. September end we purchased shares, and there is a preliminary expenses in subsidiary company. A dividend of 15% was paid in which year? October 2022. October 2022 for the year ending 31st March 2022. So do they pay dividend for the current year or for the pre-acquisition period? Pre-acquisition period. Dividend is declared and paid for which year? Last year. Plant and machinery was 2 lakhs at the beginning of the year. Revalued 1 lakh more at the time of purchase of shares. Revaluation amount itself is given. Extra how much? Revaluation profit. Bonus issue clearly mentioned. Out of which profit? Post acquisition profit by which company? Subsidiary company. Remember, subsidiary company itself not recorded this, which means this 4 lakh do not include bonus issue. This 4 lakh do not include what? Bonus issue. Subsidiary company itself is not recorded. At the beginning of the year, the P&L account balance was how much? 1 lakh. General reserve balance is given directly in the balance sheet as opening balance only. Then creditors of subsidiary company 40,000 for goods supplied by H Limited. Also included in stock goods worth how much? 16,000 supplied by holding company at a profit of what? 25% on sales is given to us. This is mutual due stock reserve adjustments. Just read through once again, then we'll start solving. Shares are acquired at the beginning of the year or middle of the year? Middle of the year. So opening balance plus 6 months will become what? Pre-acquisition profit. And the dividend was paid out of pre-acquisition profit. Okay. Plant and machinery revalued by 1 lakh more. Bonus issue 40,000 but not recorded in the books. Bonus issue 40,000 is there but not recorded in the books of subsidiary company. Opening balance P&L account is given in the adjustment. Opening balance of P&L account is given in the adjustment. And in the balance sheet, whatever they have given is which balance? Opening balance. They mentioned 1/4/2022. They mentioned. Start. Try to work out the first 3 steps. And please remember the dividend should be adjusted from which profit? Pre-acquisition profit. From this 1 lakh balance. From this 1 lakh, we have to adjust that dividend. We have to adjust that dividend. Try panel. How many equity shares are there in the subsidiary company? 4 lakh divided by 100, 4,000 shares. In that we are holding what? Do it, no issues. Can just do it. We hold 3,000 shares, balance 1,000 shares minority. Eவ்வளவு percentage? 75%, 25%. Or you can write it as 3:1 also. Then preference shares. How much? Rupees 40,000 in S, held by what? Outsiders. We don't hold any preference. And all the preference shares are held by what? Outsiders. Whatever is earned before what date? 30th September 2022. What was the P&L account at the beginning of the year given? In the adjustment, 1 lakh. From this, they would have made which one? Pre-acquisition dividend. What is the share capital of subsidiary company? 4 lakhs into eவ்வளவு percentage dividend? 15%. 60,000 they would have paid. So balance would have been 40,000. General reserve on 1/4/2022 given in balance sheet itself. That is given in the balance sheet itself. How much is given? Subsidiary company general reserve? 1,20,000. Add net profit up to 39/2022. Profit up to this date becomes which profit? Pre-acquisition profit. General reserve given as which one? Opening balance in balance sheet itself. So no need to consider general reserve. So P&L account at the end of the year. How much is given in the balance sheet? 1,80,000 subsidiary company. Less opening balance after dividend. 1 lakh dividend pay pantom. 40,000. So it will give us a net profit for the year. No need to consider general reserve. Why? That is opening balance. Whatever is given in the balance sheet is opening balance, capital. So in this 1,40,000, how many months will become capital profit? 6 months. Less preliminary expenses of subsidiary company. Don't forget that. How much? 10,000. Add revaluation profit. Revaluation profit on which asset? Plant and machinery. How much? 1 lakh. It's clearly mentioned 1 lakh more, which means we are adding 1 lakh on this date. Split this between holding company and which one? Minority in which ratio? 75%, 25% ratio. That is 1,40,000 into how many months? 6 by 12, how much? 70,000. Any other adjustment to be made? Any other adjustment to be made? Less bonus issued is clearly mentioned out of post acquisition profit 40,000. Any other adjustment? We are doing this as a third question. Revaluation. Look at plant and machinery at the beginning of the year as per adjustment. As per adjustment, what is the balance as per adjustment at the beginning of the year? It's given. At the beginning of the year, how much? 2 lakhs given. At the end of the year, for subsidiary company, how much is given? 1,80,000. 2 lakhs at the beginning of the year, less at the end as per balance sheet. How much is given? 1,80,000. Which means we have charged which one? Depreciation. Don't forget that. Depreciation. 20,000 is the depreciation charged. 20,000 is the depreciation charged. So what is the percentage of depreciation? 2 lakh by So 20,000 divided by 2 lakhs into 100, how much percentage? 10%. This depreciation should be adjusted for the post-acquisition period. Less additional depreciation. On increase in plant and machinery. On increase in plant and machinery. What is extra plant and machinery revaluation? They have directly given 1 lakh more. 1 lakh more increase பண்ணிருக்கோம். That into எவ்வளவு percentage? 10% for 6 months. Please remember, this is depreciation for the whole year. 10% is the depreciation for the whole year. Revaluation happened on 39. So post-acquisition period is only how many months? 6 months. Revenue profit. That's why I said already all the adjustments over. We are just recollecting and doing the question so that when we solve in the examination, we cannot or we will not do which one? Errors. What is the next step? Start. Minority interest. All preference shares are held by outsiders, 40,000. Equity shares, how many shares minority shareholders hold? Equity shares, 1,000 shares. Into 100 rupees or 10 rupees? 100 rupees, 1 lakh. What is the minority share of capital profit? Revenue profit. Not only that, bonus issue. $40,000 they have the right of how much? 25%. Stock reserve, check it. Is it upstream or downstream? Whether holding company sold the stock to subsidiary company or subsidiary company sold the stock to holding company. Holding to subsidiary. If it is upstream, that profit of minority should be eliminated from here. If your holding company sold the stock to subsidiary company, no adjustment required. Here, bonus shares issued is clearly given out of which profit? Post acquisition profit. Do you understand why depreciation for 6 months? Revaluation happened on the date of purchase of shares, 30th September. So depreciation only for the post acquisition period, 6 months. Done? Start the next step. Do the next step. What is the next step? Cost of control and which one? Reserves and surplus. You can do it. What is the amount paid for purchasing shares? Face value of shares and 3 lakhs. Share of capital profit. Bonus issue 40,000 into 75%, 30,000. Share to holding company. Pre-acquisition dividend 60,000 declared and 75% belongs to holding company. This question also it is capital reserve. Reserves and surplus of holding company, that general reserve and P&L account. 2 lakh plus 2 lakh 80. How much? 4 lakh 80,000. Share of revenue profit. What is the share of revenue profit? 18,000 sound. It's the same. And don't forget less stock reserve. It is downstream. What is the stock transferred and held? Last adjustment 16,000. Okay. What is the profit? 25% on sales. 25% on sales. So no need to convert. 16,000 into 25%. Then capital reserve also should be included. Since it is holding company selling the stock to subsidiary company, entire profit is eliminated from which one? Reserves and surplus. If it is other way, it would have been the minority portion would have been eliminated from what? Minority interest. Try to prepare the balance sheet next. Let us do the balance sheet with proper format because we are given classification of assets. So let us do it with proper format. Share capital, which one will come? This 3 lakhs plus 9 lakhs. Holding company share capital. Equity share capital plus preference share capital. Totally how much? 9 lakhs. Reserves and surplus we have done. Step number 6. Minority interest we have done the working. Step number 4. No application money pending allotment. Any non-current liability like debentures given in the question? No non-current liability. Current liability, let us prepare working notes. Bills payable. Bills payable, what is given? What is the bills payable given? 40,000. Add creditors of both the company. 2,60,000. Any mutual due? Mutual due, yes. Fifth adjustment, include in creditors how much? 40,000 of goods supplied minus 40,000. Any other liability? Working note 2 for non-current assets, that is fixed assets. Plant, property, equipment, otherwise called as what? Fixed assets. What and all will come in fixed assets? Land and building, holding company plus subsidiary company, you can just add and put. No change in land and building, right? 6 lakhs plus 2,60,000. Plant and machinery, holding plus subsidiary company. In the balance sheet, whatever is given, just add it. Plant and machinery, 3,30,000 plus 1,80,000, 5,10,000. Add revaluation. How much revaluation? 1 lakh less depreciation, additional depreciation. Additional depreciation, the 6 months we provided, how much? 5,000. Balance sheet value, revaluation minus depreciation. Net balance will come for the balance sheet. Share capital, equity share capital plus preference share capital. Holding company, 12 lakhs, sorry. Tangible assets. No intangible assets. No investment in this question. Goodwill, capital reserve then. Then we are making a mistake. Wait, what is the goodwill in the balance sheet? 1,30,000 clear. Here, what is the capital reserve we got? 1,35,000. It should be adjusted with goodwill in balance sheet. What is the goodwill in balance sheet? 1,30,000. So capital reserve is more than goodwill. Capital reserve is 1,35,000. Goodwill is how much? 1,30,000. So net capital reserve. Net capital reserve. Why do we call it as net capital reserve? Total of capital reserve is more than the goodwill in balance sheet. So net capital reserve will be added in balance sheet. It will be 5,000. Sorry, change your step 5, step 6, please. Capital reserve should be not knocked up against what? Goodwill in balance sheet. So net capital reserve. Why net capital reserve? Goodwill is more than the capital reserve. Sorry, capital reserve is more than the goodwill. So that will be added in reserves and surplus. Inventory, holding company plus subsidiary company minus what is the stock reserve? 4,000. Add up minus 4,000, how much you get? 3 lakh? 1,700. Trade receivables. Debtors of holding company plus subsidiary company. Debtors of holding and subsidiary company 1 lakh 90,000 less mutual due. Cash and cash equivalents. Cash balance of holding and subsidiary company are both 1 lakh. Balance sheet talent. This is for assignment question number 2. Assignment 3 we have done. We have started with assignment number 3. Try to work out assignment question number 4. Okay.